Welcome back to News Nexus, your trusted destination for deep dives into the world of news, technology, finance, and global trends. Today, we're unlocking the digital vault to explore a question that's reshaping financial systems worldwide. Is Bitcoin the future of money? Grab your coffee and settle in. This is going to be an insightful journey. Let's rewind to 2008. The world was reeling from a global financial crisis. Banks were collapsing, people were losing their homes, and trust in financial institutions was at an all-time low. Amid this chaos, an anonymous figure known as Satoshi Nakamoto introduced a revolutionary concept to the world. A white paper titled Bitcoin. A peer-to-peer electronic cash system was published, laying the foundation for what would become the world's first decentralized digital currency. Bitcoin wasn't just another financial experiment, it was a direct response to the weaknesses of the traditional banking system. The idea was both simple and radical: create a form of money that is digital, decentralized, and beyond the control of any government or financial institution. A currency built on blockchain technology, a public ledger that records every transaction with complete transparency and near impossible fraud. In January 2009, the first Bitcoin block, known as the Genesis block, was mined. And so, the digital currency era was born. You might wonder, what makes Bitcoin different from the money we use every day? Let's break it down. First, decentralization. Traditional currencies like dollars or euros are controlled by central banks and governments. Bitcoin, on the other hand, is controlled by no single entity. It's powered by a global network of computers, known as miners, that verify transactions without the need for intermediaries. Second, limited supply. Unlike fiat currencies, which governments can print in unlimited quantities, Bitcoin has a maximum supply of 21 million. This built-in scarcity is designed to create value, much like gold. Third, transparency and security. Every Bitcoin transaction is recorded on the blockchain, a public ledger that anyone can view at any time. This level of transparency makes manipulation and fraud extremely difficult. Fourth, borderless transactions. Bitcoin isn't tied to any nation or economy. It can be sent across the globe within minutes, with minimal fees and no currency conversion complications. And finally, inflation resistance. Because of its limited supply and decentralized structure, Bitcoin is often seen as a hedge against inflation, a digital alternative to gold. Now, let's step back and think about how money has evolved over time. In ancient times, people used the barter system, exchanging goods and services directly. Then came coins and precious metals, which were more durable but harder to transport. Paper money followed, offering convenience but introducing vulnerability to inflation and devaluation. The digital age brought online banking and credit cards, which increased convenience but reinforced dependence on centralized financial institutions. And now we've entered the age of cryptocurrencies. Bitcoin and other digital assets represent the next evolution: programmable, borderless, transparent money designed for a digital economy. Fast forward to today, and Bitcoin is no longer just a fringe idea embraced by tech enthusiasts. Countries like El Salvador have adopted Bitcoin as legal tender. Major companies like Tesla, Microsoft, and PayPal have integrated Bitcoin into their payment systems. Institutional investors, including BlackRock, Fidelity, and Goldman Sachs, have invested billions into the cryptocurrency space. In countries plagued by hyperinflation, such as Venezuela and Argentina, Bitcoin has become a financial lifeline for citizens seeking to protect their wealth from economic instability. But it hasn't been all smooth sailing. Bitcoin faces significant challenges on the road to widespread adoption. First, price volatility. Bitcoin's value can fluctuate wildly, sometimes changing by 10% to 20% in a single day. This instability makes it difficult for people to rely on it as a stable, everyday currency. Second, regulatory uncertainty. Governments around the world are still figuring out how to approach Bitcoin. Some have embraced it, others have restricted it, and a few have outright banned it. Third, environmental concerns. Bitcoin mining requires a massive amount of electricity. Critics argue that its carbon footprint is too high compared to traditional financial systems. Fourth, scalability. Bitcoin's network can currently process around 7 transactions per second, far below traditional payment networks like Visa, which can handle over 24,000 transactions per second. Despite these hurdles, Bitcoin's rise has prompted central banks to rethink the concept of money itself. Enter Central Bank Digital Currencies, or CBDCs. CBDCs are government-backed digital versions of national currencies. China has already launched pilot programs for the digital Yuan, while the European Central Bank is developing its digital euro. These currencies aim to blend the speed and convenience of digital payments with the security and regulation of traditional fiat money. So perhaps the future won't be Bitcoin versus dollars or euros, but rather a global financial ecosystem where Bitcoin, CBDCs, and other digital assets coexist. There's also ongoing debate about Bitcoin's true role. Is it meant to be used like traditional money for everyday purchases? Or is it better understood as a store of value, more like digital gold? When you consider its design, scarce, portable, durable, and divisible, Bitcoin shares many characteristics with gold. But unlike gold, Bitcoin is purely digital, making it far easier to transfer across the world in seconds. Many experts believe that, for now, Bitcoin serves more as a store of value than as a practical medium for daily transactions. So, what does the future hold for Bitcoin? We can expect to see increasing mainstream adoption as more businesses, financial institutions, and even governments integrate Bitcoin into their systems. Regulation will almost certainly tighten. As cryptocurrencies grow in influence, expect clear and comprehensive rules covering taxation, security, and anti-money laundering. Technological advancements are also on the horizon. Innovations like the Lightning Network are designed to make Bitcoin transactions faster and more affordable, addressing its current scalability limitations. And finally, Bitcoin has the potential to promote financial inclusion. For billions of people worldwide without access to traditional banks, Bitcoin offers the ability to store and transfer money securely and independently. But a word of caution, this is not financial advice. Bitcoin remains a highly speculative, high-risk asset. Its future depends on countless variables, from government policies to market dynamics and technological breakthroughs. If you choose to invest, make sure you do thorough research, understand the risks, and never invest more than you can afford to lose. Bitcoin should be seen as one part of a diversified financial strategy, not a shortcut to wealth. Bitcoin may not replace national currencies overnight, but it has already reshaped the global conversation about money. It has forced policymakers, banks, and individuals to question what money really is and what it could become. So the real question isn't just whether Bitcoin is the future of money, but whether the world is ready for the future of money. Thanks for joining me on this deep dive into digital currency. If you found this video informative, be sure to give it a thumbs up, subscribe to News Nexus, and tap the bell icon so you never miss a story that shapes the world. I'd love to hear your thoughts. Is Bitcoin the future of money or just another financial bubble waiting to burst? Let's talk about it in the comments. Until next time, stay curious, stay informed.